Alright guys, in this video what I'm going to show you is one of the best warning signs to spot the end of a trend, and also on the back of that, using that same signal, how to actually trade the reversal of this trend as well. So what we're going to look at is a trade in the DAX. Now this is a trade where if you look at it straight from a chart to start with, and what we've got up is a 30-minute chart. From the looks of this chart, you could see where the technical break's coming. You can see the potential of a market moving down. And the easy thing to do here is to play the break and then start thinking, yes, this is going to go, this is going to keep on going. If you look at the chart, you can already see that you could be looking all the way down towards 15,450. So a 200 tick drop once you get the break of 15,613. So that's then what gets people thinking, yes, this is going to be a massive move. And you can already see how that's going to get into people's minds. They're thinking, yes, big winner. Here comes the hero trade. We're going to collapse through the low. Huge profits to be had here. But there's one really key indicator that says to you, this perhaps isn't all it looks. And maybe you should be doubting this trend. And this also indicates to you that at some point, this trend is quite possibly going to come to an end and give you an opportunity to play a great reversal trade. So let's go and have a little look at what's going on. So here, your 30-minute chart, you're looking for a breakdown. Classic fell break of range towards the upside. We roll back down through the range, and you can play the entries from 15,665, bottom of the sort of initial range, or what most people are going to look for is the break below 15,613. Now, when people get in here, you're looking at this thinking, well, there's not a great deal below. We could possibly get down to this close at 15,562, the lows at 31, and then go and attack the lows from the previous week all the way down at 15,450. But the reversal happens. Now, this is what catches people out. So we drop, hit the first area of support, and then bounce back. And people are then cursing themselves. Why did I take that trade? Stupid idea. You should never have done this. That creates frustration. But if you understand market delta, then you're able to look at this from a different perspective. You're already doubting this move as it goes down. And you're already starting to think to yourself, maybe there's a reversal on here. Maybe I can actually play some kind of reversal trade, be it a short-term scalp reversal or the full big reversal all the way back to 15,613. So let me explain the delta reversal trade. What you first need to do is understand delta. Delta, however, is an indicator that you're only really going to get on a futures trading platform, because this isn't price derived. Most indicators, moving averages, stochastics, Bollinger Bands, all of those things are price derived. Delta's not. Delta's volume flow derivative. So delta is a volume or flow based indicator. Therefore, it's showing you how people are trading at this moment. You can't see this from a CFD broker because they don't have flow. So what you're getting then, what delta is showing you is that you have net buying. In this case, delta rising shows that there are actually more people buying into this move than selling. So if that's going on, what effectively is happening is people are moving their offers down, and each time they move their offer down, bang, it gets snapped up. They move it down, snapped up. So you've clearly got people who are willing to buy into this move down. As soon as sellers give up, as soon as they stop moving their offers down and start realizing that, well, if there's a lot of people buying, we can just move our offers up and they'll then keep on coming and buying from us. The sellers get out of the way. And this is where the turn comes from. This is how delta identifies that turn. Now, what you don't want to be doing is looking at this and thinking to yourself, I'm just going to buy as it goes down, because you're going to end up increasing your risk massively. That's averaging. You give yourself a dangerous situation. What you've got to be doing is you're using that as a clue. So your clue is that you're getting this struggling move. The market is going to struggle to go down if people are buying into the drop. That's your first clue. Delta rising, which you can see from a futures platform, says to you that this is a move that is probably not going to trend in the way that many people from the basic technical pattern are thinking that it is. So then what you need to think about is the implication. This gives you a reversal move. You could play this as a quick scalp back up towards the recent lows, or you can play it for the full move back towards 15,613. So what you're looking for then is a setup. You already have the expectation of reversal. You already doubt the trend before everybody else has worked out that this is going to turn. So you recognize this reversal coming. You set up a nice simple descending wedge. You've got delta rising, the descending wedge, little flat bottom after this whip down, gives you the chance to get in. As you play the break then, what you're looking for then is you've got two parts. You have the initial slow, steady scalp back up, and that's the move back towards the recent low, a recent reference point. Once you're through there though, everybody who has been selling progressively lower is trapped. They get out, but they get out quicker because they're panicking as they're offside. This creates a much quicker liquidation type move. So there's stages in this reversal, but the crucial part of it is understanding that this is a reversal that's likely to happen because you're using delta as an indication that this is not a trend in the way that most people think the trend is going to play out. So that's how delta is one of the best indicators of a trend failing, and also how to use that to play the move back. So there you have it. One of the best indicators that you can get from a futures platform to identify a trend that is not going to fulfill its potential. And not just that, but give you a chance to actually get on that reversal. Gives you the point, or gives you a way of saying to yourself, I think the reversal's coming, now I need to find a way in. Once you find the way in, you can play that, what I call a delta reversal trade, to roll the market back up to where it came from. Great reversal trade, one for your playbook, one to start learning. If you enjoyed that, hit subscribe, like the video, hit the notification button. You will get more of these types of trades, reversals, trend following trades, order flow trades. There'll be more of these coming up in time.